Hi everybody, good morning. Welcome to your technical update. I thought I'd start with the S&P 500. We've had a couple of nice days now from the point of view of the bulls, and we've pushed a little higher after these dramatic drops last week. And I think now we need to, this being non-farm payrolls day, I think if there's any aggressive price action to the upside, I think probably 1806 needs to hold, maybe 1807, and being the high of last week. And we'd like to see that would hold. I think a close above there, and we probably have to rethink our strategy a little bit. But I mean, ultimately, I'm looking for this to put in to carve out another lower high ahead of a fresh downside extension, and the catalyst for that could well come from emerging markets. But that's the S&P 500, and that's where we are right now pre-market. Euro dollar then. Similarly, in fact, all of these will tell a similar story because they're all interlinked and related. Similarly, we've been putting in some consolidation after last week's pullback, and we'll see now. I think probably. I thought 136 would almost easily hold, and I see we went above there yesterday. Really, I see we put in this high here, and that was 138.95, and we put in then this lower high, and then things got a little bit messy, and we put in a higher high. But really, I think the trend is still unmistakably down. So I don't know exactly where we roll over here. I think we should roll over ahead of the high of this candle, which is 137.38. And we roll over, and then we put in another fresh downside extension below 134.76. So I don't know exactly when we get this rollover, but I think once we can get rolled over ahead of the high of this candle, 137.38, then I think we will be able to put in some fresh downside extension. Again, this is simply putting in and consolidating, I think, the moves from last week, because nothing is going to move in a straight line, and nothing would ever just give us that gift to move in a straight line for us. And I think especially with the S&P 500, things have changed, and I think further emerging market weakness could be a catalyst for all of this. But non-farm payrolls, obviously, it feels like we've been waiting for non-farm payrolls since Wednesday, I think. Anyway, that's euro dollar. So dollar yen then. Again, we've had this pullback, and we've had this high, this lower high, and then consolidation, another drop last week, and here we are again. We're putting in this, up to, it's a flag pattern really, slightly up to sideways action, and I think we stall out ahead of 103.50, certainly being the high of this candle for last week, for another roll over to the downside, to test finally this 100-day moving average. I thought it was going to be this week. We may not get it this week, but we were so close. So this is our 200-day moving average, which held in October twice and in November as well, and it'll put us back down here. And I won't go out to the weekly graph. I've been doing that every day now, so I'm sure a lot of you will know what the weekly graph looks like. That sideways pennant, and then ultimately, of course, our target here is 110 to 112. So already it's a good risk reward. But I just think it pulls into this 100. It also coincides with our rising trend, which is in between the 199 from that triangular resistance turn support that we've been talking about during the week. So that's dollar yen. Euro sterling, I'll have a quick look at. I think that looks reasonably attractive. It's correlated, of course, on a more short-term basis with the euro dollar. It had a nice rally last week, and we've been putting in some sideways action. I think before another downside extension. This is probably a good opportunity, because I just think euro land and sterling land are in completely different places, and I do see sterling strengthening a lot against the euro in 2014, and this I think is a good opportunity to maybe sell some euro, after this large bullish move last week. Euro sterling, and what was the other one? New Zealand dollar, US dollar. This has been a little bit disappointing from my perspective. I do think we're putting in this topping process, and we are going to weaken like Aussie and Canadian. But we are putting in what looks a little bit like, speaking of flag patterns, another one, and often that can be followed by another fresh move to the upside. But for my money, I really do think we're rolling over here. It was, would be disappointing, I think, from the point of view of the bulls that we closed below 81 last week, and we've since had this aggressive move upwards. But really, that close below 81 was a fresh low for recent times. I think we roll over now. Probably ahead of, probably ahead of this sort of 83 number, and we go on and we push lower than 81, and there's nothing there between 81 really and 77 and a half. So, I think we're at 77 and a half, to be honest, in 2014, probably Q1 2014. That's I'm literally betting, putting my money where my mouth is. I'm short this market. So, we'll see. We'll see what happens today. Non-farm payrolls again, probably important for this market too. And US dollar, Singapore dollar, then again, I'm long this market. And if you can sum up what my positions look like, I'm long the US dollar, and I tend to be short the other side of that currency, currency pair. So here's Singapore. I think we probably hold the 126 area. 126.28 is the low of this candle. I think we hold that. We go on and we push likely higher. I have been saying, I think if it gets above 127 and closes above 127, I'll in all likelihood put my stop at break even, which is 126.90, and hold for perhaps fresh higher highs. This particular instrument, or this particular market, if you take it back to a weekly, and you take it way back in time, you can see that we've had this descending trend, but recently we've been putting in something of a consolidation pattern, and in fact we've been putting in a series of higher lows. So if you can imagine, I think we're tightening into this triangle. I think we break to the upside, and there's a lot more room if we do break this triangle to the upside. So that's dollar Singapore, and the other one we were looking at a couple of weeks back is Aussie New Zealand, and I think it's still a good opportunity here in the 108 and a halves. I'll go back in history again for you as well. And 1996 is the first time we were in the 104 to 106 area, and it held. Here it held in 2003, 2005, 2006, 2009. We're back here now. I started talking about this at RSI 21, so it was due a bounce either way, but now we've gone from the 105s up to the 108, so that's a 300 pip gain already, and probably 111 and a half is the minimum it's done really back in 2005, 2006, and often we've done a lot better. 125, that's not a bad risk reward, and then 137 twice. So I think there's still some move in this, and this could be worth perhaps if there's a big move post non-farm payrolls to the downside. I think this could be an attractive long for anybody, with a decent upside and a decent risk reward scenario. I think also after the non-farm payrolls number today, if we do get a strengthening dollar, I think there's a likelihood I'll do nothing, because I am long the dollar already, so I can just be patient and wait for other opportunities to get long again. But if we do get a weakening US dollar, I think I might look for some short-term 15-minute technical overbought and oversold studies, and maybe try and get some cash flow trades out of it and stay nimble with my stops. So that's probably how I'm going to play that. Non-farm payrolls is at 1:30 GMT, and the unemployment rate in the United States as well. So that is it for today. Have a good Friday, have a safe Friday, and have a good weekend. Take care, and be careful out there.